Time-based PO3s are by far the easiest way to become profitable, and they work so well, it almost feels like cheating. I'm going to give you a step-by-step guide on why they work so well and exactly how to use it every single day to get the exact same results that I do. You've probably already heard of the power of three, which is accumulation, manipulation, and distribution, but something that changed my trading drastically is actually the quality of the setup. And understanding that the probability of that trade becoming a winner is solely based on how much you align and how much you refine. And pairing a power of three with a high time frame candle is by far the easiest and high probability way to refine and align your strategy. With my data 3 years ago, I was purely trading the PO3 without aligning it with a high time frame candlestick, and I would come out of the month about with 2K in profit, usually around a 50% win rate as well. Fast forward to this month, 3 years later in 2026, when I've added time-based trading to my PO3, I've increased my win rate by over 20 to 30% on average, with my months ranging from 70 to 80% win rates. Focusing on base hits, but also getting home runs along the way. It's almost impossible not to be profitable using this entry model and rinse prop firms for over 5 figures a month like I do. Let me show you how to actually apply time-based trading to your power of three. So usually your power of three is going to look something like this, where you first have your accumulation, then you have your manipulation lower, and then you have your distribution higher. You're often going to find yourself in situations like this, where you have clear accumulation, manipulation, and distribution, even have a perfect entry confirmation like a CISD or inversion, but you still end up getting stopped out. That's because this PO3 is at a completely random time in the market. So let's show you the time frames you need to trade and the exact time so you can align your PO3 with a high time frame candle. Let's go back to the drawing board for a second to look at time frames. You are going to look for the power of three pattern on the 1 to the 5 minute time frame. What you are also going to be doing is looking at a 4-hour candlestick to align this with. Now, every single candlestick in the market has its genetic makeup. PO3 is the lower time frame genetic makeup of a higher time frame candle. So first the candlestick opens, second we make the low, third we make the high, and fourth we make the close. PO3 does this at the same time. First we open and accumulate, then we manipulate lower, and you'll find that the manipulation low of that PO3 is putting in the bottom wick of that 4-hour candle. Once you see that, it's time for step 3, which is to go higher and form the high of that candlestick, which is where you're going to try to catch your distribution on. To help you better understand, let's take a look and pretend that this is a high time frame 4-hour candle that's just opening. So right at the open, you will see accumulation right around the open. Then you will see this 4-hour candle start to trade lower. When that is trading lower, that is when on the 1 to the 5 minute, you will see that manipulation lower as well. What does that actually do? It starts to put in the bottom wick of this 4-hour candle, okay? So that bottom wick is being put in. Once you start to see a reversal back to the upside, that's when you're gonna try and look for a long. And when that candle pushes up, so does the 1 to the 5 minute time frame, and you're trying to enter off of one of the first inversion fair value gaps or breaks of structure, basically. Just confirming that this truly is the bottom wick of that 4-hour candle. A PO3 without a high time frame candle alignment is just gambling. It's pattern trading. We're not pattern trading here. We are trading the low time frame makeup of every single high time frame candlestick that forms in the market. Now, specific times to do this. You want to be doing this pretty much right when this new 4-hour candle opens. So that's going to be 10 a.m. and 2 p.m. Eastern time. You can also trade this during Asia and London session as well. But I like to focus on the New York session because typically there is the highest volatility during that session. I typically find my PO3 entry anywhere from 1 to 30 minutes after this 4-hour candle opens. That's the sweet spot for this strategy. You're not stuck on the chart all day. Now let's take a look at what the entry model actually is going to look like on a chart. So this is your push to the downside. We are assuming your bias is bearish in this scenario, okay? Let's say right now that the 4-hour candlestick has opened, and I'll show you guys how to see this 4-hour candlestick alongside your chart as well. So let's go back to here and grab this. So we are going to see accumulation right when that new 4-hour candle opens. We will accumulate long enough to form a 15-minute fair value gap just above this accumulation, okay? A 15-minute gap is what we're going to be focused on. That's where price is going to manipulate into, okay? So we see accumulation, that 15-minute gap, we give it enough time to form, it forms, we tap into that 15-minute gap. Our 4-hour candle here is doing what? It's putting in that top wick of the 4-hour candle, which we can mark out right here. And once that top wick is put in and we see price start to reverse, maybe an inversion fair value gap, some sort of entry confirmation like this, that is where we are going to take the short. The market is clearly putting in the high of its high time frame candle. So we can go ahead and short the market here, keep our stop loss at that top wick of that 4-hour candle, and basically catch all the distribution of this full high time frame candle lower. That's why the strategy is so powerful. That's why you can catch so many points and so much risk to reward, because you are entering a 4-hour candlestick, which most people swing trade on a 1 to 5 minute time frame. So you're catching way more risk to reward than any of them do. This is literally the same model all of my students trade. This is Oz, and he's a pro plus trader for life because he made so much money with Take Profit Trader that they only put him on live accounts now. A ridiculous amount of my students have gotten their very first payout, some 10K and upwards, by trading this specific model. But here's the thing, you're not gonna understand how to trade the strategy until you look at some real-time chart examples of trades that I have executed live in the past. So let's go on the chart. So go on your chart, look up the indicator HTF Power 3. This isn't even my indicator. I'm not sponsored. This is a free indicator that I use every single day. HTF Power 3. The next thing you're going to do is click settings and make sure you're on the 4-hour time frame. What that's going to do is pop up that 4-hour high time frame candle just next to price. So just down here, the first thing I'm going to do is mark out 2 p.m. Eastern. That's when that new 4-hour candle opens. We can already see that price has begun to accumulate. So we're going to mark out that accumulation in green here. The next thing that we're going to do is pop over to the 15-minute time frame. What can I see? A 15-minute fair value gap has formed just above this accumulation range. So I'll mark that out in gray right here. Here we can clearly see that the 4-hour candle is opened. Price has manipulated in red into that 15-minute fair value gap. And now all we're doing is basically waiting for an entry confirmation. What I'm going to do is enter off this inversion fair value gap, and I'm going to take shorts down to this nearest point of liquidity and have my stop loss right at that high of the 4-hour candle and the manipulation that we just put in. Taking a second look here, I see I have a lot of targets lower, and this is a very bearish day. So I'm going to go ahead and leave some runners down to a 2R here. See how this one plays out when we enter. As you can see, hits that 2R pretty cleanly and then continues to run lower. Let's take a look at another A+ example. Again, here our bias is very bearish. We're in a high time frame market maker sell model. Order flow is bearish. Every time we tap into a gap, we are selling off. So we are going to be bearish in this scenario. Now, most people would probably see, okay, again, we tapped into a fair value gap like we've been doing. We put in the high of the 4-hour. I'm going to go ahead and short from there, and they get obliterated because they are not trading it with the PO3. So again, first we have our accumulation marked out. Then price manipulates. Where does price manipulate into? Let's go to the 15-minute time frame. Oh, there's a 15-minute fair value gap closest to price right here. So here we have an SMT with ES, which is an added confirmation. And then we also get a change in the state of delivery. So here, that is going to be my entry confirmation for this trade. I'm going to short at the change in state of delivery and keep my stop loss at that 4-hour wicks high. Do have a target down here for about a 4 risk to reward. So let's go ahead and see how this one played out as well. As you can see, it genuinely doesn't get much more simple or powerful than this entry model. So if you want to master the PO3 to rinse prop firms exactly like I did, I basically put down 5 years of my errors and how I fixed those errors and everything you need to know about trading the PO3 model. So if you want this 30-page guide for completely free to master the model, just click the second link down below in the YouTube description. If you have any questions about the entry model, feel free to drop them in the comments, and I'll see you guys in the next video.